Mcom Semester 4 Question Bank Solution Corporate Financial Accounting, University of Mumbai, and we are doing a topic valuation of business problem number 1. So this is from the question bank which is given by the University of Mumbai. We are taking the topic valuation of business and we are going to solve problem number 1. So this is your problem sum. From the following particular, calculate the value of goodwill under the super profit method. So we have to use super profit method to calculate the value of goodwill. So we have a liability side and asset side. In asset side, goodwill is there, net tangible block, current asset is given. And in liability side, we have equity share, reserve and surplus, 10% debenture, creditors and total. So average profit of the last 3 years is 1,25,000. Okay, so they have given us the average profit of the last 3 years, that is 1,25,000, which include loss due to strike rupees 10,000 and gain due to sale of asset at rupees 10,000. Okay, so in this average profit they have included the loss due to strike, but strike don't happen every year, so we have to deduct this loss due to strike, that is we have to deduct 10,000, and the gain which they have got due to the sale of asset we have to add on, because every we have to deduct this because we cannot sell asset every year. So these are the two things where we have to, the strike we have to add and the assets we have to deduct. Normal rate of return is given in the sum. It is 10% and goodwill value is 3-year purchase of super profit. So we are going to solve this sum in a 6 steps. Okay. So there are 6 steps in this sum. So let's see the step number 1. The step number 1. So this is a solution of your problem. You can see the problem I have given you at the right hand side. So you can see the problem at the same time. And the solution is, first step is calculation of future maintainable profit. Okay, so we have to first calculate FMP, that is future maintainable profit. So we'll first take average profit which is given in the sum. You can see here they have given 1,25,000. We have to add loss due to strike because they have included this, and every year strike will not happen, so they have deducted at that time, so we have to add this loss due to strike, and they have add a profit due to sale of asset. So this year, in the current year, we are going to less this profit due to sale of asset. So 1,20,000 we are going to add loss due to strike, 10,000 less profit due to sale of asset, 10,000. So the value of a future maintainable profit is 1,25,000. So we can see that there is no change at the amount of both the amount which is we just added and we have deducted is same. So future maintainable profit is 1,25,000. This is our step number 1. Then in step number 2, we are going to calculation of normal rate of return. So normal rate of return is already given in the sum. It is 10%. So we don't have to write any formula. We just have to take this from the sum. In 99% sum, normal rate of return is given and we have to take as it is. So your second step is very easy. You just have to write the normal rate of return, that is 10%. Then step number 3, that is calculation of average capital employed. Okay, so you have to write, first you have to take all the tangible trading asset at market value, less you have to less all external liabilities. Okay, so tangible trading asset is your goodwill is intangible, so we are not going to take that. Then we have net tangible block which is 8,50,000, so we are going to write that net tangible block 8,50,000. Then we are going to take current asset which is 4 lakhs. We are going to write that 4 lakhs over here. So total of both is 12,50,000. Then we are going to deduct all external liabilities. So here we are not going to take equity shares or reserve and surplus. We are start from the external liabilities, that is 10% debenture, and creditors. So we'll mention your 10% debenture 3 lakhs, creditors 1,50,000, total of which is 4,50,000. So we'll get the capital employed 12,50,000 minus 4,50,000. So we get the total 8 lakhs. So your step number 3, average capital employed is 8 lakhs. Okay, so we got the in first step future maintainable profit. Step 3, normal rate of return, which is already given in the problem sum. Step 3, calculation of average capital employed, and we got it 8 lakhs. So we'll see the next step now. Step number 4, calculation of normal profit. Now formula for normal profit equals to average capital employed into normal rate of return divided by 100. So average capital employed, as we got it 8 lakh. We have a normal rate of return. We got it in the second step, which is 10%, which is already given in the problem set, divided by 100. So 8 lakh into 10 divided by 100, it is 80,000. It is come as 80,000. Next step is calculation of super profit. So super profit equals to future maintainable profit minus normal profit. Okay, so formula for calculating super profit is FMP, that is future maintainable profit minus normal profit. So you have the in future maintainable profit, you got amount as 1,25,000 minus normal profit, which is 80,000, equals to 45,000. So 45,000 is your super profit. Then in the step number 6, which is our final step, you're going to calculate goodwill. Okay, so goodwill equals to super profit into number of year of purchase. So super profit we got 45,000, and number of years of purchases are given in the sum. It is 3 years. See, goodwill is valued at 3 year of purchase of super profit, which is given in the sum. So we are going to take that 45,000 into 3. So we'll get 1,35,000 as an answer, which is our goodwill. Therefore, the value of a goodwill under super profit method is 1,35,000. Okay, so this is your final answer. So we are going to solve this. We have solved this problem sum into 6 steps. Our step number 1 was calculation of future maintainable profit. Step number 2, calculation of normal rate of return. Step number 3, calculation of average capital employed. Step number 4, calculation of normal profit. Step number 5, calculation of super profit. Step number 6, calculation of goodwill. So sum is very easy. You have to just calculate it in the 6 steps, which are very easy, and you will get your final answer. So this is the way we have calculated goodwill under super profit method. For next part, please prefer subscribing and click on notification bell icon for the next part. Thank you.